9/21/2011, Federal Reserve is going to be out about how they're going to try to pump another QE3 in the system. Not only that, we're ready to go long. Should that be the case, we're ready to buy the dips. We're going to see if the shorts come into play. It will be an FOMC major announcement about another QE3 going, which is the wrong thing to go, and you would think that Congress would do something about that Federal Reserve. Federal Reserve is 6 minutes late from their announcement. Markets are ready and poised. We can see all kinds of things that are happening in here, and the bid and the ask going into it. Calls and puts. Here, you got a 1290 by 11. Over here, you got 880 by 1140. The 420 put on Apple, right where it is right now. We'll see what the knee jerk is. It's 520 by 575. You better be ready to buy. Here you go. It's starting to make a move. It's starting to make a move. You can, 0 to 1/4%. There's that move. Here's that knee jerk in Google. Apple is knee jerking to the upside. There it is. That's an FOMC knee jerk. Extend the average maturity of its securities holdings. They're going to be purchasing $400 billion. QE3 is in play.
Dropping.
Yeah, it's in play. There it is. And here are the calls and puts. Everything is froze. Here it is.
Economic growth remains slow. Recent indicators point to continuing weakness in overall labor market conditions, and the unemployment rate remains elevated. Household spending has been increasing at only a modest pace in recent months, despite some recovery in sales of motor vehicles as supply chain disruptions ease. Investment in non-residential structures is still weak. The housing sector remains depressed. However, business investment in equipment and software continues to expand. Inflation appears to have moderated since earlier in the year, as prices of energy and some commodities have declined from their peaks. Longer-term inflation expectations remain stable. Consistent with its statutory mandate, the committee seeks to further foster maximum employment and price stability. The committee expects some pickup in the pace of recovery over coming quarters, but anticipation that unemployment rate will decline only gradually toward levels the committee judges to be consistent with its dual mandate. Moreover, there are significant downside risks to the economic outlook, including strains in global financial markets. The committee also anticipates that inflation will settle over coming quarters at levels at or below that consistent with the committee's dual mandate, as effects past of energy and other commodity price increases dissipate further. In a separate release from the New York Federal Reserve, breaking down the maturities range, the new figures basically after the $400 billion maturity extension program: 6 to 8 year holdings 32%, 8 to 10 years 32%, 10 to 20 years 4%, 20 to 30 years 29%. Tips in the 6 to 30 year range 3%. There were 3 dissenting votes for this policy action. The dissenters included Richard Fisher, Narayama Kochokata, and Charles Plosser. They did not support additional policy accommodation at this time. This is Hampton Pearson reporting live from the Treasury Department.
Okay, there it is right there. 3 of them do not support it. Now everybody's going to try to figure out what's going on. We're going to sit here. We can see that we're getting some sell programs here, and it's time to sell that contract at 680 now. 680 out now. 680 out on the $600 call now. Take your profits, bid it back at $4.20 in case we want to go down on that one. Thank you. 575 by 610. There's a knee-jerk in Apple. I'm watching the Baidus. I'm watching the price lines. Don't see a lot out of it. I can tell you off of that initial knee-jerk, with him saying what it was is that there's going to be a lot of controversy because right now that's just the knee-jerk downside. Then everybody's going to say, well, you know what? We're going to get that QE3 and Congress is going to have to spank that man for destroying the system. This is your knee-jerk. Right here, right now, down 92 handles. S&P is getting clobbered, down 11 handles, slightly negative here, right after the announcement, within minutes after the announcement. You have it live here now, live in market hours now. See if they'll throw up over here. Go $11, tighten it up. You don't stay with the crowd. There's $1.10, $11.10, $12.30.
11.10.
11.10, 11.20, 12.30. That's that knee jerk.
11.30.
11.30.
Dollar wide. It's kind of hard to get in, but this is why the public doesn't know how to trade options. They don't know what to do with that. Here, they're coming back in because they're going to start. That's the downside of it. Now it's going to start ticking up. Now it's going to start ticking up. Now it's going to start ticking up. This is live. This is what it's like to go through an FOMC meeting. This is what it's like. Here we go.
11.20 out.
11.20 out.
Trying to get it.
What dollar wide? You got to get one of these numbheads to throw off to you. FOMC meeting announcement.